but only just. The Consumer Price Index up 3.7% year over year. Michael Lee with me now. Michael, that seems to have minor leagues impact on the markets. I mean, nothing there. I thought a 3.7% rate, the second consecutive month with an uptick in inflation, I thought it might bring the market down, but no. What's going on?
You know, it's been baked into expectations. And so tomorrow, I would say, is the bigger number with the producer price index. Because as we've seen inflation come down over the last 6 to 9 months, it's been the price of oil that has sold off dramatically. We are hitting highs for the year on the price of oil. And although we look at inflation minus energy and food, the price of energy drives the cost of everything. And if you read the survey responses and the PPI reports over the last six to 8 months, you saw respondents saying that the cost of energy decreasing was a key driver in price pressure subsiding. So as the price of energy just spiked over the last month, I think we might need 1 or 2 more readings before that really translate through. And we're going to have a mini reacceleration in inflation, and it depends on how sticky that is, which will determine what the Fed is going to do. And so I think a lot of people were nervous that we were going to have a blowout number today that was much higher. And because we didn't, we're sitting about flat.
Yeah, we are. We're pretty much dead flat across the board. Talk to me about Apple. Didn't seem to, I think it's like 174, 175, 176 as of right now, I think right pre-market. It didn't get any kind of a boost from the iPhone 15. Why not?
Apple has been priced to perfection. In the last 3 quarters, they've had negative revenue growth year over year. So it's kind of, you're running up against the limits right here, but the bull case for Apple is you have 1.46 billion iPhones outstanding. 25% of them, or approximately 365 million, are more than 4 years old. So you're constantly looking at these upgrades. I think them changing the chargers, although super annoying, is a great way for them to make money. I'm personally annoyed at that, but I will go along with it and be spending $10 a year, $30 a year to upgrade all the chargers as we upgrade our iPhones. Look, this is an unbelievable.
Would you buy it at 176?
Yeah,
if you're a long-term investor, you're in this thing for 5 years.
You have to. Like, you have to. You have to own Apple if you want to be invested in the market. And that's why I don't think there's that much downside, because every index fund that every individual is buying in their retirement account, there's, a 2% to 12% share of Apple in there based on the type of index fund that they're buying. And it's such a behemoth of a company with such a massive moat around their business. I mean, I don't think Apple's going to go to 200 or 230 in the blink of an eye, but I don't think there's that much downside. They need to get that revenue growth positive year over year. And I believe with this new iPhone, there's a chance of them doing that as we have this upgrade cycle.
Okay. It's the only big-name stock that I've never bought in my entire life, and I wish I had. Michael Lee, thanks so much indeed. It's good to see you. All right, we're approaching the moment.